Hold on to your wallets, folks. The game is changing for student borrowers and anyone struggling with medical debt. In a bombshell announcement, the Consumer Financial Protection Bureau, the very agency designed to protect you, is drastically shifting its priorities. We're breaking down what this means for your finances right now. According to a memo reported by the Wall Street Journal, the CFPB is going to deprioritize protecting student borrowers, people buried under medical debt, and even oversight of digital payment platforms like Venmo and Zelle. Instead, the agency will refocus its efforts primarily on overseeing large banks. Think about that. The agency that's been going after predatory student loan servicers and cracking down on fraud in payment apps is pulling back. To understand how big a deal this is, let's rewind. The CFPB was created in 2010 after the devastating housing crisis. Its mission? To protect consumers from financial abuse, especially from those non-bank entities that slipped through the cracks, the ones responsible for some of the riskiest and most predatory lending. For years they've been a watchdog, but that's about to change. Under the Biden administration, the CFPB took some major actions. They cracked down on Navient for years of abuse against student borrowers, sued FEA for trying to collect discharged debts, and even went after Zelle for fraud issues. They were also working to ease the burden of medical debt by removing it from credit reports. These were big wins for consumers, but Trump officials and Republicans in Congress are now moving to undo all of that. Lawsuits dropped, regulations voided, and even attempts to lay off CFPB staff. The new memo criticizes the CFPB for focusing too much on those non-bank entities, arguing that supervision should shift back towards the big banks. The potential impact is huge. Consumer advocates are warning that this will leave student borrowers vulnerable to mistreatment and open the door for predatory practices to creep back in. Think about the millions of people who could be affected, their financial well-being hanging in the balance. Check one, check two, check. As Mike Pierce from the Student Borrower Protection Center put it, you are taking the idea of using risk to allocate resources and throwing it in the trash can. This isn't just a policy change, it's a fundamental shift in who the CFPB is prioritizing. And it's not just about who they're regulating, but how. The CFPB is also planning to reduce the number of supervisory exams, seek smaller fines, and focus more on individual fraud cases rather than addressing broader patterns of abuse. This signals a much lighter touch overall. So, what does all this mean for you? If you're a student borrower, if you're dealing with medical debt, or if you rely on digital payment platforms, you need to be aware of these changes. It's more important than ever to stay informed and protect yourself. We'll continue to follow this story closely. In the meantime, let us know your thoughts in the comments below. Share this video to spread awareness. And don't forget to subscribe for more updates on how to protect your money. Stay informed, stay vigilant.